Good morning, traders. Today is July the 2nd. My name is Neville Hornsey, market analyst with YouTrading. And today I'm going to take a look at the euro versus US dollar and a strategy to trade it. All right, so looking at the euro versus the US dollar, this is the daily chart. The blue moving average is the 200-period moving average. The red is a 20, and the green is the 50-period moving average. Down here, we have the stochastic indicator, and my settings are 10, 3, 3, with the overbought being above 70 and the oversold below 30. Okay, so we've got a new lower low, a new lower high. The stochastic hasn't confirmed this yet, so possibly there is a little bit of divergence to price on the stochastic, which some traders might be looking as a bullish signal to go higher. If we look to the active trader sentiment indicator and we try and find the euro versus US dollar, you can see that 73% of traders on this platform are actually bullish, and they might be looking to this sort of little balance area back in April as being a demand area and expecting prices then to go higher. Unfortunately, obviously, we're in this downtrend. We're making lower lows, lower highs. We had a big impulsive move down back in the middle of June, and July started weak. So I'm expecting this black supporting line to be tested. I'm expecting this little balance area and swing low to get tested and swept for the stops. And then I expect these traders that are bullish to be stopped out of their position. I mean, overall, if you go to the monthly chart, yes, price action is sort of grinding from left to right since 2015. We are above the monthly moving averages, so that is bullish. Weekly, we haven't made a significant new low yet. Obviously, if we get down to the April lows and take that, then the weekly price action itself looks bearish. Momentum, as per these moving averages, is kind of flattening off. So mix on the weekly. So the daily is where we're looking. The April, March swing low here is what we're targeting. And obviously, you could have taken a short back on the 28th of June when we had this new low below this sort of rejection candle from the 200-period moving average. That would have been a great short. But if you're not in, you're probably going to be looking for intraday shorts now to sort of get involved with this. We've got US MFP later on today, so that might be bullish for the US dollar. I'll be expecting traders to jump in ahead of that figure. They'll probably get stopped out. Then the real move will probably occur in sort of middle of next week, because we have got the 4th of July celebrations in the US, so there'll be a sort of bank holiday trading hours on Monday. But today, if you're looking to get short, you need to go down to the lower time frames, really. So if we go to an hourly, the three moving averages here, so the 20, the 50, and the 200 are all pointing down. So we're looking for shorts. We've taken this swing low here. So if I just draw that as old support, now resistance. So if we get above the 1.185, then this idea is sort of invalidated. What I am looking for now is for the stochastic to confirm, overbought prices, and then we'll be looking for the red and the green moving averages to be pointing down. So here we had an overbought stochastic, but you can see the red moving average is sort of indicating that the recent price action is actually going up. We did not test these highs here, but when the moving average is moving up, then that's an invalid signal as well. So we're looking for moving averages that are pointing down. We're looking for a recent overbought stochastic indication. So the first trade we could have taken today, or when is it? First trade we could have taken yesterday at the end of the London session was here. The reason I say here is because we had a recent overbought. We've got moving averages that are kind of rolling over, pointing downwards, and then we took out a low and we closed below the 20. So now all I'm doing is waiting for price action to go back up, test market structure, test into some moving averages, so above the 20, but hopefully around the 50. Maybe we get a push higher up to the 200, which would have sort of come down a bit. But ideally, we'll see a confluence of a recent overbought stochastic, sort of price action into the sort of dynamic resistance of the moving averages. And then we're looking for a close below the 20 and for the moving averages to be sort of pointing downwards. So that's kind of what we were looking for. Today, we might get, some big moves because of this NFP. Generally, price action goes up, down, and then back to where it started. So if you do find yourself wishing to take a trade, maybe sort of give it 5 to 15 minutes after the number comes out, and then kind of see where you are in relation to previous market structure and the moving averages. So yeah, looking to sell the rips rather than buy the dips today on the euro versus the US dollar. And when we get down to, well, assuming we get down towards the 1.175, we should be at this support line on the daily. And I'd imagine prices will sort of slow down if we are there as we go into the weekend. If you do make money today, make sure you hold on to it and then come back fresh early next week. All right, take care. Goodbye.